Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, guys. Let's take a look again at the euro currency. Well, as you can see, yesterday market has shown some rally on intraday charts, and in general we have discussed this possibility, and we said that market could show some retracement up, and the possible target of this retracement stands around the weekly pivot resistance 1 that we don't have it on this chart, but we will see it a bit later. Right now is the most interesting probably the comments on this recent rally. So what was that? Can we count on its continuation of this rally and how we should treat this rally? So in general, guys, as I have posted in our daily update in our forum, the major opinion of the traders concerning this rally is the restructuring of the positions. That's not some reversal in the sentiment. That's not real purchases and the shifting in the position on the euro. But that's mostly restructuring, because a lot of traders have taken the shorts on anticipation of the non-farm payrolls release and anticipation of the dovish comments from the European Central Bank. As the reaction on the non-farm payrolls release was relatively mild, so although market has shown this drop down, but it was not as significant as it was expected. The comments, the markets, and then market hasn't got any dovish comments from the European Central Bank, and it was postponed on the January. And in fact, guys, if we suggest that this candle doesn't exist, so if we just drop out the lack of the dovish comments from the European Central Bank, because this action was particularly due to the absence of these comments, and just replace this candle on the non-farm payrolls to this drop, we should probably get the 122 target. That is the action that investors counted on. But the absence of the dovish comments from the European Central Bank has broken this perfect picture, and in fact has postponed the further breakout to that 122 area on the later time. And that, as investors thought, and then as they described this situation in the comments, that has led to the closing of these positions, maybe triggering some stops or something of that sort, and that has led to this recent rally yesterday. So you can see the rally across the board on the gold market, on the stock market that we have discussed yesterday. Recall that we have said on the double ripple sell pattern on the daily S&P. Well, but what will happen next? From the pure technical point of view, guys, we still stand on the major factor here. Major point is that we still have the major monthly target, this 122 area, and that, guys, holds us from taking any solid long positions. That's why we currently can't count on any meaningful retracement to the upside because of the existence of the 122 target right here. And we still suggest that if any retracement up will happen on the euro currency, it will probably happen somewhere from 122 area. Because it's really very shy probability that market will leave behind the major monthly target and turn to some significant retracement prior it will be hit. That's why, since we mostly deal with the odds, these significant chances that market will hit it first just doesn't let us to take the short some position and to count on any solid retracement. Yes, market could show some bounces, actions inside in some tight range, but we can't just rely and think about them some significant retracement before this target will hit. That's just our position. And if you will take a look at the recent rally, you just could understand it, that despite that this action looks really tremendous on the intraday charts, on the daily chart it absolutely doesn't break the picture. Market still forming lower lows and lower highs, this tendency. Market still stands inside of this wedge pattern, okay? So no breakout has followed. Market still stands below the monthly pivot point, and take a look. Although rally was really strong, right to the closing of the trading session, market has bounced down to the middle of this range. That's why we still stand in our analysis on the daily chart. Speaking on the intraday chart, so if you take a look at the 4-hour time frame chart, what we see here, first of all, take a look. The market still stands below the monthly weekly pivot resistance one, and resistance one holds the upside retracement. It means that the previous trend down is still valid. So bearish sentiment is still valid because weekly pivot resistance one holds the upside retracement. Okay, so here we've got the normal reaction on the butterfly, so 618 retracement of this move down. It's a very good reaction on the butterfly that they have discussed, but currently, guys, that's all. So we do not see any continuation up. In the very short-term perspective, in today's trading session, we probably should be ready for retracement in the area of the weekly pivot point and the confluence support. That's at minimum will happen. Also, guys, take a look on the hourly chart. The target that we have discussed yesterday, we said that probably market could reach the 1618 extension of this ABCD pattern in an area of the previous top and the weekly pivot resistance one. And that has happened yesterday. So our target has been achieved. Now market turns to the retracement down. In general speaking, guys, to start to think about the taking long position or count on any solid retracement up, market at least should show the reversal swing. So for that purpose, market should move above the weekly monthly pivot point and to show the greater swing up than the previous swing down. In this case, we probably could speak on the possible this free drive that it has started work and the 126 target that market could climb to the monthly pivot resistance one and to reach this 126 target, or even to count on some further retracement. Until this won't happen, it's very difficult to count on any significant retracement, especially as I said, having at the back the target that hasn't been completed yet on the monthly chart. I mean 122 target. That's why on the daily analysis we still stand on our thought that hitting on the 122 first, any retracement, if it will happen at all, second. And that is really a very meaningful reason. It's really a valuable reason to be extra careful with any rallies that now market's taking, because this is really very, very risky. If you do not see the big picture, you could be catched in the wrong position very fast by having the target, incomplete target on the high picture, and if you do not take it into consideration, that will be really expensive. That's why we still stand on this thought. That's our major position on the euro currency, and we think that hardly any retracement, significant retracement will happen until market will hit the major target. Because now a lot of thoughts appeared concerning the market could climb to the 132, maybe to the 126, and so on. Yes, this maybe will happen, but probably only after hitting 122 target, but not before that. And any attempt of the moving higher should be treated with the suspicious until markets haven't reached the 122 target. So that's our major position on the euro currency. Also, guys, just forgot to say, here, guys, you probably could see the shape of the head and shoulders pattern, but unfortunately there is some lack of the harmony. So this bottom stands not even the 127 of this potential shoulder. Market hasn't confirmed the harmony between the harmony ratios between the head and the shoulders. That's not very good combination. And if market will move below the confluence support here, below the weekly pivot point, the next point to watch for will be here. It's 122.85. The lows, previous lows of market will pass through it. That's probably will tell us that market stands on the road to the 122 target. To the upside, as I said, market should show the reversal swing first. So upside swing should be greater and move above the weekly pivot resistance one. In this case, we could maybe start to think what will happen next, what's really going on. At least this will be the confirmation of some bullish ambitions of the market. Until this will happen, we can't just even count seriously on any upside action. So that's our position on the euro currency right now.